You ever see the stock market get really good news and then completely tank? Well, that's exactly what just happened. We had a really, really weird week, and it's got investors completely on edge. So let's get into it. Why a new fear around AI is causing what some are calling a software bloodbath on Wall Street. All right, so here's what we're going to cover. First, we'll look at the mystery of last week's market drop. Then, we're going to uncover this core fear that's driving everything. After that, we'll break down the new tech that's causing all this anxiety, see how the big money is moving because of it, and then we'll wrap up with what it all means for investing in this kind of crazy new era. Okay, so first up, Wall Street's strange week. And our story really begins with a genuine puzzle. The kind of week that makes financial analysts just scratch their heads and wonder if someone changed the rules of the game overnight. See, on paper, everything should have been fantastic. We got positive economic data, signs that inflation was finally cooling off, and normally, Wall Street absolutely loves that kind of news. But this time was different. Very, very different. Instead of a big rally, the tech-heavy NASDAQ index dropped a whopping 2.1%. And look, this wasn't some tiny little dip. This was a significant slide that just seemed to come out of nowhere, completely flying in the face of all the good economic news. And that right there is the million-dollar question, isn't it? If the economy is looking better, why is the tech market suddenly looking so much worse? Well, the answer, it turns out, has everything to do with a single, powerful idea that is spreading like wildfire through the investment world. And that brings us to the core of this whole thing, the cannibalization fear. This isn't just about next quarter's profits or a new competitor. No, this is about a deep, almost existential fear over the future of software itself. The term everyone is whispering is AI cannibalization. And what it means, in simple terms, is that investors are terrified that the very AI technology everyone's so excited about is going to end up eating the lunch of the established software giants, making their current products basically worthless. And this isn't just some theory somebody cooked up. A key report on this whole mess puts it right out there. The old way of doing business, selling software licenses, is falling out of fashion, fast. Investors are now betting on a totally new model, AI agents. But what does that even mean? This is where we get to the real heart of the disruption. We are talking about a fundamental change, not just in how software is sold, but in what software even is. Okay, this slide breaks it down perfectly. For decades, we've had what you'd call legacy software, right? Think Microsoft Office or Adobe Photoshop. You buy it, you learn how to use it, and you do the work inside the software. Agentic AI completely flips that script. You don't use it, you give it a goal. So instead of going on a travel site yourself, you could just tell an agent, hey, find me the cheapest flight to Tokyo next month. No layovers over 3 hours. And if you find one under $800, book it. The agent just goes and does it for you. And this is precisely why this new model is so terrifying for the big established companies. When an AI agent can do the task, you're not locked into one company's world anymore. The agent can use a dozen different services to get your goal accomplished, which makes it super easy to switch. This completely redefines a software company's value. It's not about trapping users anymore, it's all about pure performance. So this fear, it's not just talk. It's causing investors to pull their money out of some places and jam it into others. We're watching a massive reshuffling of the deck, and it's creating some very clear winners and losers. So, on one side, you've got the companies that are losing that investor confidence. These are the traditional software as a service or SaaS companies like Adobe, the ones that rely on you paying a subscription every month. But on the other side, you've got the winners. First, the hardware companies, the NVIDIAs and the Cerebras of the world, the ones building the actual infrastructure for AI. And second, and this is the surprising part, staples. We're talking about utilities, real estate, things that are seen as super safe because people need them no matter what's happening in the crazy tech world. And this big move into boring but stable companies actually has a name. It's called a defensive rotation. It's a classic Wall Street move. When one part of the market, like tech, gets too volatile and unpredictable, big money runs for safety. They're just parking their cash in predictable industries until the dust from this whole AI explosion finally settles. So, with all this chaos, how is anyone supposed to navigate this new world? Well, the report we've been looking at actually offers some clear, actionable advice for getting through these turbulent times. So what are the big takeaways for investors? Well, first, be careful with companies that rely on that old per-user licensing model. Second, focus on the infrastructure, the picks and shovels of the AI gold rush.
Third, think about that defensive rotation into safer, non-tech stables. And finally, keep a really, really close eye on Microsoft. They're the big legacy giant trying to make this massive pivot to AI. Whether they succeed or fail is going to tell us a lot about the future for the entire industry.
When it's all said and done, this shift from software we use to software that acts for us, it's more than just a tech change. It's a fundamental power shift. The big question of who wins in this new era. Is it the user, the AI agent, or the companies that build them? That's the question that has Wall Street so terrified. And frankly, it's something we're all going to be watching very, very closely.